Thanks very much, Jeff, for making the time to join Africa Investor and share some of your views.
Great, I'm happy to be here. Thanks.
Fantastic. On your current trip to the continent.
Yeah.
What we're looking to talk about today is really something that touches on key leadership dynamics, both within yourself and across the company, GE, at the global and at the sort of Pan-African level. One of the key areas in terms of leadership that we read a lot about, and we hear you talking to a lot, is the dawn of the age of gas. And we know that sort of GE has got a big focus in terms of your age of gas forecast. Tell us, what sort of perspectives do you think the continent should take in terms of creating a better environment to better leverage the competitiveness of its natural gas endowment?
So if you think about one of the big advancements, let's say, of the past decade, you know, there's been a number. It's you know, what Google has done in search and, you know, a whole series of different things. But one of them is really, you know, kind of what's happened in gas development, gas finds, gas extraction. And if you're an American, you read about it every day, shale gas in the US, cost of electricity, but it's happening everywhere. It's happening in Mozambique, Angola, Kazakhstan, incredible number of places. So the plentiful nature of gas is a potential game changer, I think, in terms of cost of energy and environmentally and things like that. Now, if you zero in on Africa, let's just take one concept, gas to power. So you're in a continent that has a 100 gigawatt deficit of electricity. So this continent needs 100 gigawatts of electricity, and it's in a sea of gas. There's gas everywhere. So in many ways, Africa can solve its own problem. I mean, there's not many countries on Earth that are regions on Earth that have the capability to solve its own problem. So how do you get from having this massive resource and turning it into monetizing it, let's say, into electricity, for instance, or other things? And that, to me, is one of the great challenges of, that's why companies like GE are put on Earth, right? So we can bring technology, we can bring financial solutions to it, but that's, I think, one of the most interesting things to work on right now is this whole notion of gas to power. And the definitive place to think about it is right here, where I am this week.
Fantastic. I mean, what practical things would you recommend that African governments put in place now? Forget the sort of, you know, the sort of backward integration, but look at, you know, what can happen now this year on a practical level to take advantage of this.
So what I would say is, you know, every country is a different story, but we happen to be sitting in maybe the prototype, which is Nigeria. So Nigeria has a massive electricity deficit, and they have a ton of gas. And so in some ways, the government's already taken certain positive steps. So they've privatized the energy sector. They've got fantastic, I would say, financial schemes for how people can develop electricity. The issue is still, where's the gas going to come from? So what the government needs to do is they need to have a gas master plan. What's the price going to be? Once you set what the price is going to be, there's going to be private capital that can come in and build pipelines and CNG, mini LNG. And so that's what you see. That's kind of the under the surface capability that's going on in Africa
so it's not
today.
too big a step, really. Then
No, look, I think it's a. I actually think in Nigeria, you know, the finish line is in sight. You know, we're down to the last mile, if you will. We're down to the last 2 or 3 things that have to happen. But they have the gas. They're going to have to. They're going to have a gas price of maybe $2.50 or $3. That's still very low on a global scale. And then I think the investment dollars are going to snap into here, and there'll be different solutions. There'll be pipelines, there'll be mini LNG, there'll be CNG in a box, and that's exciting.
So it's about getting that ecosystem going with the right policy choice taken right
exactly.
at the forefront,
yeah.
underpinning this.
You know, in other words, you need capital to come in. You need investment capital to come in. So you need, you know, kind of certainty of the process. You know, what's the price going to be and things like that. And you need certainty of gas supply. And I think the government of Nigeria has made tremendous progress in the last 12 months in terms of seeing that through.
That's fantastic. You talked about, we're seeing the finish line in terms of gas. Another big global issue, I mean, for governments around the world, but 2014, we've heard African governments are prioritizing job creation. And our good friend, probably mutual friend potentially, Duncan Niederauer, when we met with a number of heads of state in New York, he basically talked about this Jobs Council and the competitiveness report that President Obama put together. And he was saying that the continent would do well to steal a few pages, to use his words, to steal a few pages from the report to you know, stimulate job creation on the continent. You were the chair of that
Yeah.
council. You know, just share with us which pages you'd recommend.
Yeah, no.
the
So it's a
company-
great question. So the first, I would agree with your premise. I think there's not enough jobs in any country around the world. But one of the things that really hit me this week is just the number of kids in these countries. So I was in Ethiopia, Kenya, Mozambique, and Nigeria this week. And the number of college students is growing, but the number of jobs for those college students aren't growing fast enough.
Right.
So you have not only underemployment among all classes, but you have people with college degrees that are not walking into it. So you need job creation.
Yeah.
So now let's talk about, I'd say what I learned working with President Obama on the Jobs Council were 4 things that I think are true in every country around the world. The first one is the importance of training and education. So you need more engineers, you need more skilled manufacturing workers, absolutely key. The second one is a laser-like focus on small and medium-sized business. So growing the entrepreneurial class, growing the startup businesses, that has to happen. The third is a real sense for infrastructure, so electricity, railroads, bridges, roads. That is key to driving competitiveness and productivity. Yeah. And then the fourth is just sensible regulation. You know, everybody needs rules. Every country wants to have rules, but you need to have rules that make sense and promote job growth. So those are really important. Now, let's come to Africa. Of those 4 things, I mean, I think every country in Africa needs those 4 things that I just mentioned. But one that I would pick off is that every government should have a real plan for small and medium-sized business. That's where the jobs have to be created. There needs to be a growing entrepreneurial class. For us in the United States, when we create 1 job in the United States, we create 8 in the supply chain, so that you have that multiplier. In Africa, you don't have a sufficient entrepreneurial class yet to pick up for that multiplier effect. And that's how jobs get created. Yeah.
Well, I think from what I understand about GE's approach, you're really also bringing up in the continent a lot of the sort of SMEs and the project developers and your supply chain, which is...
Yeah, we had a meeting today in Nigeria with our key suppliers that, you know, we're localizing here in Calabar. We brought our suppliers here today. We're a company that likes working with small businesses, both on a buy side and also on the sell side. So we very much appreciate that relationship. And I think we view that as a skill set. And that's one of the things that I think we try to bring to the continent of Africa. An observation I would make, and you know, I'm always learning every day, but I really think that corporate social responsibility of this era is SME development. You know, in many ways, you know, it's important for companies to give to poverty, healthcare, things like that. But the true skill companies need to bring is competitiveness, job creation, innovation, and that's really the most important thing, I think, on the continent right now.
Superb.
Yeah.
Jeff Immelt, the man. At which point in your career did you envisage or see yourself potentially and actually running one of the largest industrial companies in the world? Was it when you were at Dartmouth studying applied mathematics, or at Harvard, or when you were working your way through the ranks at GE?
You know, so when I graduated from business school in 1982, and I thought I knew I wanted to be work in industry. I knew I wanted to be a manager. I didn't want to be an investment banker or a consultant or something. I wanted to hit the ground. And I thought I'd go to work for GE for 5 years, you know, and I'd learn a lot, and then I could leave and go do something else. And pretty soon those 5 years grew into 15 or 20 years, and I liked my jobs, I liked what I was doing. And, you know, I think sometimes careers are, you know, always you need to be working hard and skillful, but sometimes things are just luck, you know, in terms of, you know, my predecessor reached the age where he was going to leave. I was one of the senior guys at that time. Right. I think you'd have to be crazy to dream about being CEO of GE because the odds are against you, you know, all the time. But I always liked what I do. I always loved the company. I think when I got in my mid-30s, I thought I could run something, you know, someday, and I always I was always more kind of driven by the output versus the job. You know, in other words, I've always been more motivated by getting the most out of my potential and painting on a canvas. You know, that's always what's turned me on. Creating something. That's always what's turned me on. and the job's just been a part of that.
Okay.
But I've always liked, I tell people, I love the work. You know, in other words, I love the 100 things a CEO does. I don't really, you know, I don't really dig necessarily, you know, he's the CEO.
Right,
you know,
right,
that's
right.
okay. I mean, it's not bad, you know, but it's
has its perks.
But I love like, you know, I love like walking through a factory. I love doing a global trip. I love doing a tech review. I love all the things that are part of it. And when you run GE, you just got great things to work on.
Fantastic. I mean, you've talked about sort of SMEs, and of course, there's a whole crop of entrepreneurs that are associated with that. Do you think it's true in terms of the perspective in the market these days with the new tech startups and the sort of new knowledge economy, that today's entrepreneurs are very good in terms of their creative capacity, but there are not enough entrepreneurs being taught to run and build the businesses?
You know, I think it's one of those great questions and great challenges. So on one side, I think you have the ability to scale entrepreneurship. And when I look at Google, I have so much respect for what they've done, because they've taken great technology search and built it into an incredible company, and they've done it in 15 years. I mean, it's pretty amazing what they've done. Now,
Market cap outpacing.
Market cap is bigger than us, and you know, second biggest in the world. And you know, whether they'll be, you know, I mean, we've been around for 140 years now, so whether they'll be here in 2050, 2150 or something like that remains to be seen. But they've done everything right so far. And then I think, from my standpoint, I respect all my competitors, so I know a lot about Siemens and Caterpillar and everybody like that. But what I'm trying to do is teach GE how to be faster, more entrepreneurial, more responsive to customers. Yeah. So in some ways, we're kind of going, you know, they're becoming more process focused, we're becoming more market and technology focused, and I think that's what makes the world go round. Learning from each other, trying to figure out, you know, where it is and things like that. I think in the end, you know, you write a publication that's really focused on infrastructure. GE was put on earth to do hard things well. You know, build a jet engine, build a power plant, do it in Africa. Sure. You know, so I think there's always going to be a place for companies that can do high tech, high risk systems integration in difficult places, and that's where, you know, that's where we play to our best. Okay. Yeah.
Fantastic. Earlier this year, you wrote a letter to your shareholders suggesting that since you started in 2001, there perhaps hasn't been enough of a focus within the company on Africa. Yeah. Tell us how you've managed to turn that around and how you went about it. Because Africa's clearly
it's been a big, so I had, in my career before I become CEO, I had been in our plastics business and I had been in our healthcare business, both very global businesses. Right. And in both cases, I was a part of a team. So, you know, we developed businesses in China. So I came to the job with a very strong knowledge of Asia and China and India. So I always had this predilection for the emerging markets. And when I was CEO for maybe 2 or 3 years, we really said, look, we really believe in the kind of the power of these billion new consumers that are going to join the middle class. So let's go long emerging markets. So we started maybe 5 or 8 or, you know, maybe 8 years ago, really filling out our businesses in the Middle East, Africa, Russia, Latin America, Mexico, China, India, Indonesia, all those places. And so we kind of went step by step by step by step. Now, I look at Africa today, and I'll give you a couple different perspectives. One is I'm even more today completely dedicated to this notion of the emerging markets. You know, in other words, I think what I felt 10 years ago, I feel passionately about today, number one. Number two, Africa truly needs everything that GE has. So from jet engines to locomotives to things like that. So number three, you know, we've gone from less than $1 billion maybe 10 years ago, 500 million, to between sub-Saharan Africa and Northern Africa, we're at roughly a $6 billion run rate right now. So we've multiplied by 10 our revenue in, let's say, 10 years. That's a faster growth trajectory than China. So when I look at the, you know, the capability here, or the potential, we're on as high a trajectory as we are any place in the world. And then I would just circle back to you know, we're long gas, so gas to power, you know, when you look at Africa,
Yeah.
if you believe in the efficacy of the big gas theme, this is the place, you know? And other things, locomotives, we could sell more locomotives here than just about any region in the world. I was at Ethiopia Airlines the other day. They're building some of the great airlines. Healthcare over the next 10 or 20 years could be really big. So I really feel like we're at the beginning phases of a wave that could be powerful. And then, look, I like it because it's hard, you know? Some people shy away from when it's hard. I love it because it's hard. Because when things are hard, it means that very few people can copy.
Yeah.
So by coming here, by coming early, by developing, you're really setting a standard that makes it harder for your competitors to meet. And that's not true in Germany or Chicago or Japan or even China today. You know, so this is a place where we can paint that blank canvas at a time that's ahead of our competition.
Super. But I think you're going to touch on my next point, which is, I mean, this is your third trip in a row to Nigeria.
Yeah.
As you travel across the continent, across Africa, how would you compare the opportunity set with the other markets that you're excited about? And now this is a big analogy from the investment community. Asia is, I mean, Africa's Asia, 20 years away and all of this. But as you look at opportunities that you're going to bring into the fold and nurture and develop and finance.
You know, it's different in almost every country, and I would say different things trigger it. The first thing I'd say is I've always believed in the retail nature of leadership. You know, in other words, you know, I could go to Davos or I could go to other meetings and meet with all the ministers from Africa. But it's a different sense than you get when you come here, see the country. You know, when you need to know Nigeria from a couple different angles. You need to know it from the angle of how does Shell feel about it. You need to know how the vice president feels about it. You need to know how Aliko Dangote feels about it. You need to experience a 2.5-hour traffic jam on the bridge going to the airport in Lagos to know how your team really, you know, what's their life like every day. So you need to experience to be good at. So I'd start there. And then I'd say, you know, this week I was in Ethiopia. Ethiopia has hydropower. They have a big population. They have a very centrally controlled government. You know, we have one strategy for that. Then I was in Kenya. You know, Kenya is a mixture of some resources, the ability to work on wind energy, things like that. We have a different strategy for Kenya. Then I went to Mozambique. Mozambique is a big oil and gas, as big as Brazil, population of 25 million people, different strategy there. And then we come to Nigeria. Nigeria has, you know, all the natural resources, pretty good entrepreneurial class. So I think we're smart enough today to have differentiated strategies for each one of the countries, all behind big themes like gas to power, infrastructure investment, locomotives. But in the end, you've got to be in all these places. You've got to be local on all these places. You've got to have local teams in all these places. And what I always tell our team, you know, in a company, you can't afford to have cartoons. You can't afford to say, this is Africa at 30,000 feet. I don't care about Africa at 30,000 feet. I want Africa. I want Nigeria right here, right now. What's going on? How can we move faster? And I think that's what you get when you travel through it. Now, I'd go around the horn and then come back to Nigeria and say, okay, now, when you're CEO, you know, your team really kind of tells you what you need to do, right? And then you work together on who and how and all those things. But the CEO uniquely does the win, you know? Does the thing that says, okay, it's going to be the next 5 years, we're going to go along. I'm going to put all my chips right here. And I think that's what we've tried to do in Africa, is really say, this is the time. Sometime between 2007 and 2020, the die will be cast for G in Africa for the next 50 years. So let's go. The race is on, let's go. Let's think about it in that context. And I would say we're right in the middle of an investment period for the company that will set our potential for 30 or 40 years.
I mean, staying with the travel, as you've gone across the continent, has there been a moment, or at which moment did you say to yourself, Africa is not a good investment, it's a great investment, and I feel validated by the decision that I took so long ago? Has there been any experience?
Look, I think it's I give you a couple different experiences. I think one is just around natural resources.
Right.
You know, in other words, I know what can happen in Mozambique because I've seen Brazil.
Okay.
You know, in other words, I know what can happen in Nigeria because I've seen Brazil. So I've seen places that are 5 or 10 years ahead, and you can say, hey, if we steer the ship this way,
Yeah.
this can go. So you have these moments where you have a flash of, I've been in this conversation before, except it was in Beijing
Right.
10 years ago or something like that. So I've had a number of those around resources. Then I'd say around the talent of the team. So the first time I came to Africa, really, everybody lived in Dubai. You know, one of the most dangerous things you can ask when you're a CEO is, where do you live? So you show up in Lagos and you're sitting with a room full of 20 GE people, and not one of them lives in Nigeria. You might have a handful in South Africa, and everybody else lives in Dubai. You say, hey guys, this is not going to last. We're going to get everybody here. Now I come, and I've been coming enough to Nigeria is, you know, I know people's first name. I remember what they did last year. I see them stand tall. I see them with their own ideas, their own ownership of the company, and I love that. So I've been able to see the power of the team. And the third thing is, look, here in Nigeria, you know, I always try to be realistic about everything. I wouldn't have given you one chance that they would have gotten the power reform done last year. You know, maybe 1 in 10. Okay. They got it done. You know, so they got it done. It took risks. So you see, I think the incredible, you know, because I always know what we can do as a company, you know, and what I can control as a leader. But I think it's always rewarding to see people that want to help themselves, that are willing to drive change, that want to help themselves. You don't see that everywhere, but you can see it. Now, I also see things that concern me. You know, when you're in a country like Ethiopia, which I think is an interesting place to invest, and they're graduating 4,000 engineers every year, and maybe 10% of them have jobs, that's not a good formula. You know, in other words, so you see things that say, okay, we better figure out how to help somebody in that endeavor, or else that's that's unsustainable.
Sure.
So every time I get smarter about the things I like, but also I see where the next challenges are at the same time.
I mean, you make the case very.
I thought you looked good myself.
All right, there we go. Thanks. I mean, you make the case well about the how essential Africa is. Can you sort of, if we can go a bit more granular into what does, I mean, at the global level, what does Nigeria, Ghana, Mozambique, Angola, Kenya mean in terms of sales and revenues and products and sectors at the global level?
For a company like GE?
Yes.
Oh, look, I mean, I think the resource-rich market, if you just take the industrial piece, the resource-rich markets are a third of our revenue. They might have been 10% a decade ago. And I think you're talking about countries that ought to be able to grow 20% a year if we do well. Yeah. So, some starting off a smaller base than others. But look, if we do our job, we could do $1 billion a year in Mozambique, more than that in Angola, right, and much more than that in Nigeria. Now, I'm a globalist, but I'm not sure I could have found Mozambique on a map 6 years ago. Right. I mean, I knew vaguely where it was, but that's the difference. These are meaningful countries, yeah, in a meaningful resource base, and it's going to happen right before our eyes.
I mean, we're talking about over $90 billion a year of infrastructure deficit on the continent. Yeah. We continue to talk to the governments about how to sort of address that and work with the private sector. But I mean, have you looked at that entire deficit? Oh, sure. And said, look, we understand that only a percentage of this is actually bankable, or investable versus some of the larger projects that scare some of the other institutions.
I think about it exactly the same way you do, which is where's the deficit, but where's the bankability, and how does it work? And I actually think a service that you can provide and that we can provide and that's necessary here is, let's take healthcare. for instance. There's 50 different PPP programs to do public-private partnerships in healthcare around the world. Only 5 of them will work. The other 45 are never going to attract the capital, are never going to attract the private investors, aren't going to deliver the patient outcomes. So there's a, I hate to call it knowledge because it sounds arrogant, but there's a experience deficit as it pertains to how do these infrastructure projects really need to be structured to gain real implementation. And that's where I think information sources like yours can say, hey guys, it can't work this way. It's not bankable. You're not going to get capital. And then the other side, I think, where we can help governments, or where you can help, is that everything in Africa today gets priced like equity. Debt gets priced like equity, right? And there are coming deals in Africa today that can be priced like debt, that have a steady revenue stream, that have known assets. And so there has to be ways to bring the cost of capital down in Africa. And that's the big challenge, is how do you work with governments to make them smarter about how to do privatization and infrastructure? And how do you get all the liquidity that exists around the world to price risk the right way in Africa today? And there's a massive deficit on both sides, in my opinion. And that's where things like Power Africa, driven by the U.S. state, by the U.S. government, other kind of facilitative finance organizations can be very helpful.
Absolutely. I mean, we're working on just that very question, where we're basically looking at, well, the government's talking about cost of capital. There is a perspective that the private sector makes too much. We're saying what we deliver value. On the other hand, try to balance out the conversation. But in terms of the cost of capital, we also encourage public sector institutions to look at the development multiplier that comes as a direct consequence of that.
Look at locomotives, for instance. If you think about it, electricity and railroads, those had 2 GDP points. It's been proven like 60 times. And so it's right out there to be had. And then, look, if there's an investment profile and the only risk I have to take is execution risk, right? That should be priced like debt. But if I have to take market risk, execution risk, stuff like that, an investor is going to expect a 25, 30, 35% return, and that takes the project right off the map. So it's a completely different profile, right? So that's where I think, but that again, we very conscientiously developed infrastructure because we believe this is the real multiplier and the thing that we can do to close the gap.
Fantastic. In terms of the in GE Capital, for example, we're now seeing a lot of pension funds across Africa whose asset base is perfect for infrastructure, but they can't invest in infrastructure. We're seeing Basel III restricting some of the commercial banks from being able to participate in longer term finance. Isn't there a role for GE Capital?
Oh, sure.
I mean, a complete gap?
I have different, this trip I learned a lot, I listened a lot, and I would say there's a front end of GE Capital that is how do you do lending to small and medium business and how do you do project finance that we can bring, we should bring more to Africa. And so, I'm never going to put a treasury function in Nigeria and lend in Naira, Right. I just can't, it's just like, not today, there's just too many other things, life's too short, it's too hard. But I can bring people that know how to structure deals, both infrastructure and flow business, and we need to bring more of them here. And then what I plan to do is use the GE balance sheet, not the GE Capital balance sheet, to invest in Africa. With all the Basel, that's one of the advantages GE has. With all the Basel III and stuff like that, there's no way I can invest really off the GE Capital balance sheet. But, as a company, we have tens of billions of dollars of cash that I can put to work. And the way we've thought about it is coming to a country like Nigeria, any country in the region, and putting permanent capital. So basically saying, look, we're going to take a couple $100 million, put it here, and then let it rotate project by project. So you basically, we're looking to earn a good return. We don't need to earn a great return because we see the advantages of electricity and healthcare and all the other things. But just go project by project and get smarter. And when we come in, we can bring other people. We can bring Macquarie or XM or other people with us.
Okay. And what are your key messages to the sort of global infrastructure investment community that's looking and saying, no, it's too difficult? I mean, what are you saying to them? What would your
Look, I think keep your eyes open. understand your own risk appetite, but I view the risk-return equation in Africa to be positive for investors today.
Okay.
So my view is there's nothing that's risk-free.
Right.
Everything has a risk. But when I look at Africa, the risk is here and the return potential is here.
Yes.
So I would start small. I would say to everybody, come here. I would start small, but I would get experience. I'd put people on the ground because I think you really are going to, you know, it's not too late right now, but there is going to be a time in which you're just not going to be the partner of choice.
Right.
Because one of the things I like about Africa is that people connect the dots and they respect the companies that are willing to be with them on the ground.
Yeah.
So there's a loyalty factor that exists here that doesn't exist in some of the other places that we do business.
Okay, so in terms of what you've been reporting in the media as sort of having as a key issue for the continent, you said that you see Africa's growth linked quite closely to that of China. And now with the emerging market sell-off that we're seeing right now as we speak, and the tapering, and the Janet Yellen coming on board, are you still of that same opinion and do you remain enthusiastic?
I am. You know, I really believe that if you, since the financial crisis, that if you bought during moments of volatility, you've made a bunch of money. Not a little bit, but a lot.
Okay.
So we're just in a world where the growth trajectory is steadily up, but there's just like, you know, there's just more ways to scare yourself than you can possibly imagine. Right. So now it's, you know, tapering, the 5 countries, things like that. But I look at big picture, U.S. gets a little bit better every day. I believe in what the Chinese government's doing, and so, you know, let's say it's growing at 7.8% instead of 8.2%. That's still pretty good, you know. So I always tell people, look at what's happening in the U.S., look at what's happening in China, look at what's happening in your own neighborhood. Yeah. And if you do those 3 things, you can be your own economist and decide. So I actually think the world is. It's still volatile, but it's generally positive, and that's going to be good for Africa.
So you're not worried about the peaks and the troughs in the middle. It's the journey. It's the end game.
Look, I think if you studied all the valleys since 2009, you missed the investing opportunity of your lifetime, right? Yeah. Because there were days when the market would be down 10% in a couple weeks, and be up 15% a month later. Right. So you know, and just. That's
longer term view.
Yeah. Here's my view. Nigeria needs 40 gigawatts of power. They have gas. I'll take that bet. I'll take that bet. No matter what's going on in Turkey and South Africa and India, I look at that and say, you know, that's my bet. My bet is the fundamentals are there. Right. You know, you have the supply, you have the need, you have people that in a meaningful way are trying to put good capital to use. Yeah. I'd rather stay focused on that.
Superb.
Yeah.
Just rounding up, what would you describe as your 5 must-do investments? What are you saying to your team? What are the 5 must-do investments in the continent 2014?
So here's what I would say. I would say the electrification of Africa. You know, when your name's General Electric, you can't miss that one. Yeah, okay, so I'd say, and that's going to come off the grid, on the grid. It's going to come in a lot of different shapes, but I think that's important. So that's key. Being great local partners with all of our, all the regions that we do business so that we can help support, you know, all the oil and gas developments and things like that, but localization, really big time, particularly around the oil and gas opportunity. Locomotives on steroids. You know, I just think locomotives are absolutely key, and it's going to explode, and it's just one of those great infrastructure investments. I think finding business models in healthcare that work in these markets. Right. We're not quite there yet, but that's an opportunity. So, power, oil and gas localization, locomotives, healthcare, and then I'd like GE to be known as the SME-friendly investor. Okay. You know, somebody that knows how to go shoulder to shoulder with local business people, develop supply chains, develop partnerships. You know, we've done that in every country around the world. That's the nature. It's the culture of the company, really.
Can you give us an example of how that's working? I know that there was a bank of industry partnership that you.
Yeah, no, we just did that today, but we had 10 suppliers here that we brought today.
Okay.
And we introduced them to the vice president of the country, the minister of industry, the BOI, everybody in the country. And 2 are from the United States, 3 are from Europe, 5 are from Nigeria. You know, great opportunities for those guys to invest.
Yeah.
We had a roundtable last night in Lagos with a dozen independent oil companies in Nigeria, all local Nigerian businessmen who have bought brownfields and things like that to see, okay, how could we work together? You know, just a couple examples of how we work with SMEs.
Fantastic. Yeah. And finally, you know, everyone's just come off the back of Davos. There's quiet optimism about 2014. What's the mindset in GE globally about this year, about 2014?
Oh, I think it's the same. You know, in other words, I think we're really in the same pattern every year post-financial crisis. And that is the developed world gets you know, kind of step by step better. The emerging world, driven in different countries in different ways, continues to be reasonably okay, strong. Not universal, but in key places. The global economy grows, you know, 3 to 5%, something like that. There's a, you know, I think the Federal Reserves around the world have kind of indicated to everybody that they're going to be cautious. So whether it's Chairman Yellen in the United States or Mario Draghi in Europe, you know, there's nobody that's kind of got their finger over a red button that wants to blow this thing up. So you've got a monetary system that's benign. You know, even, you know, tapering $10 billion in an economy the size of the U.S. is just not that, you know, it's not that significant. So
it's a confidence factor.
It's exactly that. It's a confidence factor. So I think slow growth with volatility is 14. It's going to be similar to 13. And, you know, companies have to pick those investment themes that they think, you know, they can you know, play in the long term. And we've got ours, and that's what we invest behind.
Superb. Thank you very much.
Great, thanks. It was great.
Great pleasure.
Good to see you. Great, thank you.
Doing business in Africa. You can't afford to be without Africa Investor.